The Czechs are bribing us with our own money. Let's be straight. What they do is they steal it out of our paycheck, and then they give us back 10% of it, signed by Trump. It's amazing that so many of the American electorate are stupid enough that they can be bribed with their own money. Gold has served its purpose for at least 1,000 years, but likely longer, as being both a medium of exchange and a store of value. Gold does well during periods of time when people are concerned about the maintenance of their purchasing power in fiat-denominated instruments. We've already talked about why people need to be concerned about that, because there's a guarantee that your purchasing power in fiat savings instruments deteriorates. With gold, at least you have a chance. And it has evidenced itself as a superior store of value for at least 1,000 years.
Rick Rule warns the U.S. dollar could lose up to 75% of its value over the next decade due to soaring unfunded liabilities and inflation. His advice? Own gold. A proven store of value that, with digital tokens, can also act as a medium of exchange. For investors, royalty and streaming companies outperform miners, with huge potential in copper-related streams. This isn't political. It's inevitable. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
Importantly, too, with the advent of technology, gold is becoming at once a store of value and a medium of exchange. And let me explain. When you, Daryl, go to buy physical gold at a dealer, whether or not it's in the state of Washington or not, you're probably paying a 3% premium on the buy side and a 3% premium on the sell side. In other words, your transaction cost is 6%. But increasingly, with the availability of digital coins representing gold deposit receipts at places like Tether and elsewhere, you will be able to do that same transactions for fractions of a percent, which means that you will again be able to use gold as money. You'll be able to go to Starbucks and buy a cup of coffee in gold. And Starbucks will be able to aggregate all of those fractional payments and, if they wish, surrender those coins for physical gold, which means that gold increasingly in the future will be at once a medium of exchange and a store of value, which is another reason why I think you have to own gold. Franco-Nevada is the best of the best, the finest precious metals investment on the planet. Despite the fact that it's done extremely well, I have it as a 4. Rankings are 1 to 10, 1 being best, 10 being worst. For the record, I've granted 11 number 1 rankings in 35 years of ranking stocks. A 1 ranking is extremely rare. Wheaton, I also have as a 4. Very, very, very high quality company. No longer silver centric, but still about 40% of its revenues silver related, which means that the financial results in the future, given the doubling of the silver price of the last 12 months, will surprise people whose expectation is rooted in the past. I have Elemental Altus as a 3. You have seen some price weakness as a consequence of some Elemental shareholders selling and some EMX shareholders selling. That has been offset by a private infusion of $100 million, pardon me, into Elemental Altus by Tether and the promise of access to more capital should the company need it. I believe there's going to be a consolidation of the Tier 3 space. And I believe that the finest of the Tier 3 royalty companies is Elemental Altus. In addition to having access to capital and the discipline to make intelligent acquisitions, through the EMX side of Elemental Altus, the company has the ability through prospect generation to create their own royalties, not to have to buy them, but in fact to make them. That royalty and streaming companies are lower risk alternatives to exploration producing companies. The structure of the business is that you don't have a direct interest in the gold or silver mine, which means that you're not responsible for the capital cost, the operating cost, or the sustaining capital costs. You just get the money. Your gross becomes your net. From a general administrative cost perspective, too, operating gold mines is more expensive than not operating gold mines. Companies like Barrick and Newmont, have huge staffs of geologists, engineers, accountants, stuff like that. The royalty and streaming companies don't have to have that because they don't operate things. So they're cheaper to operate. They're better businesses. And they're not sort of better businesses. They're way better businesses. Gold and silver cash flow in a royalty or streaming wrapper trades in the market at 14 or 15 times cash flow. Base metals cash flow as part of a producing company changes hands at 5 or 6 times cash flow. What that means is that the gold and silver byproduct from a copper mine is best owned by a royalty and streaming company. A royalty and streaming company can pay a disproportionate amount for that portion of the mine's revenue that comes from gold and silver rather relative to copper. The copper industry estimates, and I just heard this number in London, it surprised me. The copper industry estimates that they will need to spend $250 billion in the next 10 years to maintain current production in a market where demand is increasing at 3% compounded. They're not talking about keeping up with demand. They're talking about maintaining current production. $250 billion. Now, the industry would appear to be, in terms of their access to free cash and credit, about $100 billion short. That there are literally tens of billions of dollars of opportunity available to the precious metal streaming community from copper construction activities alone. The second facet of growth will be the consolidation of the mining industry and the precious metals mining industry. We're going to see a wave of M&A, billions and billions and billions of dollars of M&A. The cheapest form of quasi-equity is in a streaming space. The Sprott product is 100% backed by physical. Institutional holders can redeem their trust for physical units, which reduces and often eliminates the arbitrage. In other words, makes the underlying security track the gold and silver price much more efficiently. And the transaction costs on the New York Stock Exchange are de minimis. So the first level of risk reduction, if you want to obviate the transaction cost, the storage cost, and the insurance cost, is probably the Sprott product. I am, as I say, unfamiliar with all of the specifics around the Tether product. I am unsure as to whether the Tether stablecoin is 100% backed by physical gold or silver, and whether or not one can surrender the XAUT for physical gold or silver. If that feature isn't present, either Tether will add that feature or somebody else will create a coin that will allow you to do that. Mm-hmm. Probably the most secure form of storage would be in a vault that was owned by a publicly traded company, so that you could assure yourself that the balance sheet and the income statement of the vault owner precluded you from experiencing the risk of the vault owner stealing your gold or silver. At Battle Bank, my bank, we have insisted that our own gold and our customers' gold be stored at Brinks, precisely because we don't want them to store the gold at home, where they could experience personal security risks, but also because my memory of the 1970s was that a lot of people trusted their gold and silver to storage facilities that then either folded or stole the metal. And I don't want to experience that risk. The deterioration in the purchasing power of the US dollar will impact nobody as seriously as the unborn. My generation, the baby boomers, voted ourselves all kinds of cool benefits and services, but we forgot to pay for them. The consequence of that is that the net present value of unfunded entitlement liabilities in the United States exceeds $120 trillion. Trillion dollars. And it gets worse. That's why I say that the deterioration in the purchasing value of the US dollar is an inevitability. We have two choices, Daryl, as a consequence of politics. One, we can be honest like the Argentines and default. Or two, we can do what America did in the 1970s, which is default on the installment plan. keep the nominal value of the promises while inflating away the net present value. I think we choose door B. I've lived through it before. I know how it happens. I know how it ends. And I'm doomed to live through it again. Forewarned is forearmed. I have no interest in storing my gold or silver in vaults that aren't publicly controlled. Many of the best bullion dealers give you an option of which facility to store in. And they often emphasize vaults that they themselves have better custodial arrangements with. Meaning it might be that they charge you 50 basis points to store your gold or silver, while the vault is charging them 10 basis points. And they're making a 40 basis point spread on you. The consequence of that is that their spread is predicated on you storing your gold in a facility that isn't publicly controlled, which is to say a facility where you don't have access to the balance sheet and the income statement, where you don't understand anything about the solvency of the institution that stores your gold and silver. To me, that's an unacceptable risk.